Good evening, everyone, and welcome. Go to any business meeting anywhere, and the reading of the minutes from the last session is likely to be the biggest snooze on the agenda. But not today, and not when the minutes come from a Federal Reserve meeting. Stocks catapulted at precisely 2 p.m. Eastern today when the Fed published the minutes from its March meeting. Short-term bond prices rose too. Why? Well, fairly simple. The minutes reaffirmed the idea that the Fed is in no hurry to raise interest rates. What's more, it was revealed today that new chair Janet Yellen was so concerned about fine-tuning interest rate guidance that she called an unusual pre-meeting video conference on March 4th to discuss the matter. The Dow soared 81 points on the day. The Nasdaq jumped nearly 71, an almost 2% spike for the day, and the S&P 500 added 20. Here's a look at the bond numbers on a bit of a mixed day. There's the 5-year note. You see the yield coming down there. The dollar index weakened a bit, and the gold prices briefly turned higher after the Fed's minutes were released, but they ended the day slightly lower. Steve Leisman has more on the Fed minutes and where the bank stands on when interest rates may start to climb higher.
The minutes of the Federal Reserve's March meeting suggesting that maybe the Fed wasn't as hawkish as some in the market believed at the time. The Fed saying it was concerned that the market would take the wrong signal from the individual funds rates forecasts of its members. Those forecasts showed the Fed believed rates would be higher in 2015 and 2016 than the market had previously thought. It's a big problem for the Fed, where it says one thing in its statement about the funds rate, but also provides the individual forecast of its members. In this case, those were at odds, and it spooked the market into thinking rates would be higher. The minutes say the participants were concerned that that could be misconstrued by the market into thinking the Fed would be tighter than it otherwise would have been. The minutes say specifically that the public should follow statements, not the individual forecasts. All but one Fed member sees rates rising not until 2015 or later. A large majority of the Fed see a gradual rise to the funds rate when it does begin going up. There was further tapering expected throughout the rest of this year, assuming the economy continued to improve. And the Fed saw fewer headwinds to the economy this year and better growth. And they thought that the weakness in the winter was largely the result of the weather. For Nightly Business Report, I'm Steve Leisman.